Good morning, ladies and gentlemen. How's everybody doing? How is everybody doing this morning? Hopefully pretty good. Alrighty. Well, there's three stocks I'm keeping an eye on. Mainly INTC, RHE, CGC. So RHE and CGC we'll cover, of course. But INTC is an earnings play. There's quite a few earnings that came out that you could also watch. Maybe I'll kind of skim through a few of them. But mainly liked INTC's gap down the most. Then liked the way CGC has been performing or kind of setting up past couple days. And then RHE is one that's like, if volume picks up, we could have a good move. What's going on, guys? Good morning, good morning, good morning. Thanks, Andrea. Appreciate that. So let's start here with CGC just because it's on the screen, so why not? Turn down some of this other stuff. All right, so CGC, recently it's gotten some pretty good news, pretty sure. Yeah, it's been getting some news, pretty frequently. I'm not going to go over it, but it has been. So the idea here is that for the past 4 days, it struggled to really break the $48 level. More like 48.70, 49 area, right? We kind of topped here, top. It's really struggling to get over that. So this creates an opportunity where we could see a nice breakout over 48.40s up into the 49, over 48.75. Ideally, what you're looking for is it to do something like this. All right, and you want it to squeeze up in this pennant and over 48.40. It's really been struggling already. And this morning, you can kind of see it's just consolidating, right? Just consolidating back and forth. We've had a few of these little dashes, little hash marks drop down a bit. But nonetheless, we're still back up into this range. So if this can keep going sideways just like this, it's possible we can see this squeeze up and out, but it's also very possible we're going to see it drop out. Because the problem is it's just a back and forth battle. We've topped many times here, but we've also created higher lows into it. And we've created this like kind of flat downward consolidation. And a lot of times this can lead towards a nice move. So the reason we're struggling over 48.50, 48.75 is if you go back in time, that's where these tops are. 1, 2, 3, 4, right there. All that topping action is what this is struggling to get over. So a lot of people have been short on CGC through here, and probably some more people added short, right, or we've had some bag holders, because that's the other thing too is look at this, right? You guys see this is a wedge formation, right? Look at what happened the last time we formed a wedge. It broke down. So look at what we're doing now. We're forming a wedge, but just on a smaller time frame. Okay, so the last time we formed that wedge on the daily chart here, a lot of people got long on these tops thinking it was going to break, and it never broke to the upside, ends up dropping out. You could have some bag holders on the stock around here that have just been waiting to get out at break even. So they held through this pain. They got back up to their entry points that were long back a couple months ago. And now they're getting out right here, just saying, hey, I'm done with it. I'm getting out break even. And that's also the reason why we're struggling to get over this 48.75. But with the right push, we could definitely see CGC squeeze up and out today. So we're going to keep CGC on watch for a long play. All right. Daniel, yeah, we'll take a look at that. Sure. All right, now next one on the list. I know you guys are going to be like, Connor, you're crazy. No way. RHE is on watch for long. It's dropped down all the way to this 164 support that it put in pre-market before its big move. Let me show you an example of what we're looking for, MBRX. So MBRX, you could see, had its big move, went through this drop, and then the following day, it had this squeeze move. Very common that we see penny stocks do this. After they have a big run and they drop out, they have like another day, couple days down the line where they have this squeeze day. Basically, this is short sellers coming in with a few buyers on a momentum move, and short sellers get squeezed out that have been short from here, and throughout this day, and then they get squeezed. So same thing with RHE. All right, Nice big penny stock move from $1 up to $4, crashes. Now we're looking to see if we can squeeze out any of these long-term short sellers today. Okay. Next one is Intel is an earnings INTC. Come on. There you go, bud. So I want to follow Intel short bias initially because, well, it's just a major gap down. There's been news that this is going to bring down the Dow Jones by 29 points, whatever. But anyways, not the best earnings report. I think they lowered their forward guidance for 2019, basically meaning anytime you see someone lowers their guidance, that basically means the company is telling you that they don't think they're going to perform as well throughout the year of 2019. So if you ever have trouble, getting a grasp of what earnings are when they go guidance raise, guidance lower, just know that when guidance is lower, it's basically the company telling you as the investors that, hey, we don't see our business performing that well throughout 2019, which means as an investor, you could expect that maybe in the revenue or earnings are going to start missing in the next couple quarters. So if that's the case, you could think, well, maybe I'm going to take some of my investment out or I'm going to decrease my position in the company if they don't plan to do as well in the future. So it's supposed to be a forecast on how well they plan to do in the future, essentially. Okay. So anyways, 1 year day chart won't work. We got to go to 4 hours. So if you look at the 4 hour chart after Intel's gap down, it's going to bring you right into a big demand zone. So this $53 is the start of the demand zone off of this higher low move right here that pushed it on a nice move up. But in fact, the really strong support for this downward play would be at about 51.70. So, I want to be long on it because we have entered the demand zone, but I think if I try and get long initially here on the day, it might be too soon. So kind of watching it, see if we kind of drop out another 2 points or so down towards 51. And then I think we could be looking at a good dip buy, for a short-term swing trade on Intel. So initially following Intel short bias today below the 53 mark. So far it's held pretty good support. 1 tap, 2 tap, 3 tap, 4, 5, 6, 7 taps here at 53 area without breaking down. So if it doesn't break down 53 and we see it getting soaked up here around this 53 or just below, we might be looking at a squeeze play on Intel today. So if it can't successfully break down 53 and it's really struggling, might watch it for a reversal long play as well. Okay. RBZ, won't be trading RBZ. Don't like RBZ. RBZ is not a good stock to trade. It's not a fluent movement stock, so I don't even have to go over it. It gapped up this morning into pre-market, formed a wedge, started to fail the wedge. Haven't looked at it since, but I can already tell you I'm probably not going to trade that stock. If you want to trade it, by all means, but the spread usually gets a little whack. It's just not a good stock to trade. And if you're wondering about PETX, again, another penny stock up today. I won't be trading it. Doesn't really look that great. Stock has 45 million outstanding shares, has 45 million share float, has a 1.8%. 45 million outstanding shares, about a 40 million share float, has about a 1.8% short float. Doesn't really meet any of the good criteria for a penny stock to play. So again, probably won't focus on PETX. Yeah, that's so again, RBZ, PETX, probably no-goes for the day. At least in my opinion. Of course, you can still follow them. Of course, every once in a while I'm wrong. They can still have a little bit of a decent move, but they don't meet the criteria for me that makes me want to jump on them to trade them. So probably won't focus on that. All right. Tesla might be interesting just because it did get kind of low, right? You're in 246 area. Where are we at? Yeah, be careful on this. So ideally, what most people are following, wow, that's a pretty strong wedge development. Yeah, but anyways, so here's the thing with Tesla, right? Here, let me ask you guys, who can tell me where the support's at on Tesla right now? This is a true question. So where's the support? Zero. That could be. No, but seriously, can anybody tell me where it's at? 255, 250-ish. That's funny that they blocked your comment for saying 250-ish. That's odd. So 250, 239, 240s. So you'll see that most people right now are saying that support is in 250, which you're right. Right around here, or sorry, like this support right here. This 250 to 244, right? 242. Like this is in fact where the obvious support is for right now, or where the stock has most recently bounced, right? Bounce, bounce, bounce. So now what we know is this. Hold on one second. Let me get my text tool out. So if most everybody thinks support's right around this level, that means that anybody who bought for long term or swing trade or whatever, that now means that this. So let me put this on the chart and blow up the text. Hopefully everyone will be able to read this. Properties, size, 36. Okay. Hold on, let me put this on the chart. Oh, gotta click it. That's right. Okay. So if support is at 240s, 242, that's where a lot of people are gonna put in stop losses that have been long for a while, which means that's where all the liquidity is for the stock. So if I was a big guy and I really want to get some orders in, I'm going to take the stock below the 240s to where I know all the stop loss orders are going to be, and I'll suck in all those stop loss orders and I'll run that price back up. So in my personal opinion, I think it's very likely we see Tesla below 240 and into, you know, the 235 area, because why not? I mean, we've been on a downward trend. Earnings weren't all that great. The only thing Tesla really has going for it right now is the fact that it's in a little bit of a wedge pattern. Hold on one second. I mean, that's basically it. I mean, it's in a downward wedge, which means it could snap to the upside. So I think Tesla is below 240. We see this kind of snap down a little bit more. But I do think that it is getting to a potential buy point. I think there you can kind of see it's getting jerked back and forth here. So we know people are starting to kind of buy into the stock a little bit. But pay attention to that. Support is around this, like, you know, 240s, 242 area. But I think we could very well see it down towards 235, a little bit lower. Okay. Somebody said something about something. ABIO, supernova setup, I think is what was said. Where'd it go? Was it ABIO? Yes. Okay, so let's take a look at ABIO. Interesting. Supernova setup, ABIO. Well, I'm going to have to say I beg to differ on that, but I could be wrong. All right, Mr. Sir, you are correct. It does have the characteristics to be a supernova, absolutely. But the chart setup just isn't there yet. But you are right. So I will give an apology and say my beg to differ is incorrect. You are right. The characteristics are met for a supernova. The only thing we need now is news, which we don't really have yet. So yeah, keep ABIO on watch. It does have the characteristics of a supernova stock. Just needs some strong news and a little bit better of a chart setup, and it could be rocking and rolling. So shout out to whomever that was. I lost your name. Maybe it was Aaron or Addicted. It was a blue icon. Richie. There you go, Richie. Thank you, brother. But it could be a pump and dump. Philip, pump and dumps don't exist. Everything you think you know about a pump and dump, it doesn't exist. pump and dumps have changed. Pump and dumps don't happen anymore. So stocks can get pumped up and then they can dump out, but in reality, they're not pump and dumps. So no, right? But yeah, I mean, anything that's a low float stock can get pumped up and then it can drop out really fast, but it doesn't actually make it a pump and dump. So you will hear people talking about pump and dump, but just know that they're incorrect and it doesn't even exist anymore for the most part. Pump and dumps are basically the old form of people cold calling people on stocks, getting the stock to be bought up and pumped up, and then the people that were early on investors would drop all their shares in at the top, and then they would literally dump out the stocks. It was a fraudulent way of moving stocks, which doesn't really happen much, or if any, anywhere other than in the crypto world. That's for sure. Supernova stock, go look at Mr. Sterling, Mrs. Sterling, Bia Bawa. Go look at the stock BPTH, and that's called Supernova. Yeah. Anyways, I don't even know where I'm at anymore. Kind of lost track of a lot of stuff. Yeah, yep. Yep, BBTH, that's a pump, not a pump and dump, excuse me, that's a supernova. UNH, United Healthcare, probably, I don't know, but probably, I mean, maybe long. I mean, I'm an idiot. I was even telling myself to buy this after earnings and still didn't buy it because I'm an idiot, but, you know. But yeah, the whole healthcare sector blew up. I mean, I would say it's a buy. I mean, long term, I would probably call it a buy. I mean, maybe not where it's at. You know, it's probably going to retrace some here, pull back. But the play was down here. Play was right after earnings and in this candle here. Right now, it's really not. It's a higher risk trade for you. If you're going to trade here, it's become higher risk, right? So I think your best bet is if you're looking for some quick money, right? I think you got to move on and look for something else. For me, quick money is right here. Already started getting long IRBT. Already bought some shares here on this one. Started buying some shares yesterday on M, 3M. Started buying a little bit. But here's going to be some pretty easy money. 3M and IRBT right here. Big drop downs coming into the demand zone. So just slowly limping in the stock right now. Going to have a reverse here in the next week or two probably. If not, I'm not in heavy size yet, so I won't get smoked. But yeah, that's pretty much easy money right there. IRBT, M, keep those on watch. Yeah. Yeah, basically any of the healthcare stocks that got smoked recently that are actually big name stocks, you should keep an eye on. And I'm actually going to do a video maybe later today. I don't know. Maybe this weekend. I don't know, but I'm going to do a pretty cool video that maybe some of you guys know what to do or how you could go about doing this, but it's a way of picking, it's a strategy for picking potentially strong stocks. You know, that's just basically a strategy for picking strong stocks by going through ETFs, or you could just invest in an ETF, but if you wanted the stocks, and anyways, so got a pretty cool video coming up for you guys on that, but yeah, basically pick any of the big name healthcare stocks that have gotten just destroyed recently. And, you know, follow them long bias because the healthcare sector got smoked a couple weeks back, you know, and, you know, I mean, healthcare is still booming. Healthcare is going to continue to boom. So I don't know what the sell-off's accompanied by, if it was just some little short-term scare, whatever it was, but you should definitely do that. Oh, yeah. Well, is the market going to... So, yes, the market is going to come down. All right, guys. I know everyone's on this high train right now thinking that December didn't mean anything. Like, guys, we didn't go through a correction in the beginning of 2017 to go through another correction in the beginning or end of 2017 for no reason. Okay? There's a reason, right? You're not just you don't go through a double correction, basically. Okay, maybe not. Beginning of 2017 wasn't a full-blown correction, but pretty damn close. So you don't basically go through two corrections in a year for no reason, okay? I know everybody's on their high horse right now and everybody's drinking the Kool-Aid of the market and have been, but again, what's to come is probably worse than '08. Seriously. I know it's hard to believe because there's no way that we could ever repeat history, right? That never happens in the history of history. Do we ever repeat history? Wait, I'm confused now. You get the point. But yeah, I mean, I'm not here to scare anybody. You know, I have my beliefs, but everyone's like, no, Trump's not going to let it happen. Trump is nothing. Okay, Trump is one dude. He does not control anything, basically. Okay, for one, he doesn't really control much when it comes to the market. When it comes to economics, we constantly get it wrong. When it comes to science and it comes to fixing people, we learn from the mistakes, right? When you go into heart surgery, how much more advanced is heart surgery these days, right? We learn when it comes to science and we learn when it comes to math, right? But when it comes to economics, do the same mistakes over and over and over again, right? So right now, everything's a bubble. Everything, not just the market, everything, right? Look at how much your cars cost. Look at how much homes cost. Look at how much cell phones cost. Look at how much everything costs. Everything's a bubble. There isn't really anything that isn't in bubble right now, okay? Now, I know I'll get shamed on like I'm an idiot, but again, everything is pretty much in a bubble right now. So it's gonna be a day of reckoning. Something you also have to know, everybody knows what QE is, right? Everybody knows what QE is, right? Quantitative easing, what the Federal Reserve did back in '08, the financial crisis, to basically artificially start propping up the stock market to get it moving again. Yeah, remember that? That's what kickstarted the comeback of the market. That's what did it for us. Guess what's happening now? The Federal Reserve is telling you guys that, economic conditions aren't too bad and things aren't really that bad, right? That's what they're saying. They're being very dovish. They're saying, well, we don't really see any really big problems coming ahead. But do you guys know what the Federal Reserve is doing now? The Federal Reserve is starting to sell out of the market. Yeah, they said the markets, they don't see much of a scare coming and things aren't too bad, but they're starting to sell out of the market. That's interesting. Why would you be selling out of the market if the market's so strong and you don't see any downward big scare coming? I don't know. Well, personally, what they're doing is they're going through quantitative tightening. They're reducing their balance sheet and their play within the market, and they're starting to sell off some of their notes, treasuries, and bonds. So they're starting to get out of the market. Yeah, so it's interesting why they would be doing that if the market doesn't, So again, yeah. So look it up. The Federal Reserve is starting to tighten down on their balance sheet, and there's reasons why they do it. It's not specifically because they think the market's going to crash. They have all sorts of reasons, but they're doing the opposite of what they did to get the market moving in '08, and that's quantitative tightening now. Right now, they're tightening down their monetary policy and play within the market. So something to read into, something to look into. So when I say that, again, the market isn't all that great right now, okay? Again, though companies may report, companies are reporting good earnings, okay, great, fantastic, right? If I'm a consumer, I would be more likely to spend money on products and services if I look at my 401k and I look at my retirement plans and it says I'm up 26% this year because the market bounced. You're right. I artificially, in my retirement accounts, have a shit ton of money. So euphorically, I think I have more money than I actually do, but I really don't. So I'm more likely to spend money because I think I have more money, but in reality, I don't. That's just my investments that are up. So it says I have more money, but until I sell, I haven't really realized the money. So all it takes is one negative downturn in the market to take away all those gains that you, so to speak, have. And now it looks like you have far less money than you actually do. And now you as the consumer will stop spending because you go, oh shit, I really don't have as much money. And then what's going to happen? Companies are going to start to report less than great earnings. They're going to start reporting earnings that aren't so good. And now people are going, that's why the market's going down. Companies are exactly. It's a trickle effect. So again, I'm not sold on this whole market. I'll just sit back and wait. I'll do my day trading and small little investing, but again, foot is not on the gas pedal. Anyways, with that being said, I got to get back to the private group. Thanks again for tuning in. If you haven't already put your name on the pre-registration list for our options and kind of advanced swing trading class, again, I'm not saying I'm just some killer options trader and you guys are going to become absolute stellar millionaires, but we did bring on some extra people into Boiler Room Trading, partnered with. First link in the description of the video. Put your name on the pre-registration list. It is for options trading that many people have asked about, but I got a guy named Dave Hahn who's going to be working with us. Has been doing it for 10 or so, 12 years. Butterflies, iron condors, vertical spreads. I mean, every single basically strategy you could think you know about options, he basically knows why you would do it, where you would do it. And so he has a really good niche for options, right? That's why I brought him on, because I don't know it and it would take me way too long to ever learn it to fully teach people. So that is coming. If you want your name on it, first link in the description. I will see you guys come Monday morning. Everybody, take care.